Restructurings, asset sales, cap hikes, European banks are in crisis. How successfully are they finding their way out? Beat Wittmann, European banks have really struggled to recover from the financial crisis in 2008 and 2009. What's happened?
Well, the European banks never rehabilitated really after 2008, and the economic environment was very deflationary. So we had risk aversion on the investor side and also in the real economy in terms of lending. And then, of course, huge overcapacities which have never been addressed really in Europe.
Why have their counterparts in the US managed that process since the financial crisis so much better?
Well, the US counterparties were forced basically by their policymakers, the SEC, the Fed and the Treasury, to consolidate their businesses, to write off bad debt, to have mergers, take new licenses, rehabilitate basically their capital position, which allowed them basically to turn the corner. And in today's environment, with probably less regulation ahead, being able to deploy capital into growth strategies.
Closer to home, here in Switzerland, we see Credit Suisse going through a multi-year, very deep restructuring. How optimistic are you for the prospects of that?
Well, the track record of universal banks in Europe, including Credit Suisse, is rather bad. They keep restructuring every business cycle, so they have not a lot of credibility. And in most cases, in capital increases, they have thrown good money after bad money. So there is hope, but hope is not a strategy.
One part of Credit Suisse's strategy is a partial IPO of the Swiss business. Do you have a view on that?
Well, I think basically it makes sense in some form to dismantle the existing universal banks, and the Swiss business is sizable, stable and profitable, so shareholders would have a clear choice. And I think Credit Suisse has all potential in the international business to develop into a kind of super merchant bank, great brand name presence, history. And I only hope that they stick to their guns and will deliver some consistency in strategy.
And we see a similar type of restructuring going on at Deutsche Bank. Are you similarly kind of downbeat there?
I think I'm much more downbeat on Deutsche because Deutsche lacks the stable domestic retail market and the stable contribution from wealth and asset management, really. So Deutsche is still too big for its own good. And there's another capital increase, and I think even that partial floating of the asset management is a half-baked measure and not a real change in strategy.
So really, would you invest in European financial stocks at all, given those views?
Well, exactly for that reason, and looking at the valuation, I would invest in them actually, but you would have to have some patience probably. But I think the macro environment in Europe in terms of reflation, in terms of European banking union forcing them now to consolidate, and ultimately also improved investor sentiment, business confidence and consumer confidence is leading to some improved prospects for banks, and that's not yet in the price.
What sort of alternatives do investors have?
Well, they always have alternatives. We live in a large world, but if you look at risk return here, this is pretty interesting. I would probably take an index exposure to European banks on one side, and on the other side I would probably invest in some special situations, just as some activist investors do that, because there is of course some potential, but that's very company specific.
Thank you very much for those very interesting views. We'll look forward to watching that unfold in the coming months and years. Thank you, Beat Wittmann. That was Finews TV in cooperation with Ducascopy TV. Please join us next time.